Okay, welcome everybody to the day after. The day after what, you might ask? Well, it's the day after our big Counterpunch Trader pre-summer launch, which is winding up. And if you're listening to this video, chances are you are a proud new member of the Counterpunch Trader. So big congratulations to all of you who just jumped on board with us. I'm really excited for you. I want you to keep in mind that you have to have an open mind to new ideas and realize that the Counterpunch Trader is not just dots on the chart. I would encourage you to really become a student of the Counterpunch Advanced Calculator that you all have and learn how to use it. You can scale it down, you can turn stuff off and focus in on one thing at a time. Put up a dummy chart, change some settings, watch what happens, don't be afraid to use it. Okay, that being said, I also want you to be slow to commit your real money to trading. I would rather see you be a student of the strategy and learn how to use it as a tool to make you money consistently and so that you can enjoy ongoing success. Okay, just remember the theme of how we started the webinar, and keep in mind that we are going to be sticklers and remain completely focused on that theme, and you should be also if you really want to succeed. Counterpunch is a marvelous strategy. So all that being said, I thought it would be very useful and helpful while you're going through the learning process, or even if you're a long-term member, to take a look at the day after session. We launched on Thursday. You saw some great trades, some great examples. Well, what happened on Friday, the very next day? Let's take a look. And I'm going to start, you know me, I usually lead out with futures because that's what I like to trade. But I want to start out with Forex because there are some really great Forex trades and trade plans that you can use. And if you want to day trade Forex, I think it's a great idea, but you have to remain super disciplined and really understand the trade plan before you begin. So let's talk about it quickly. We'll discuss it as we go through this morning's trades with the Euro US. Okay, so let me just roll back to the beginning of the session, which we usually start at 8:30 New York time. We have to be aware of news events, however. Okay, that's very important. And we also are going to use trend mode. Okay, so we have to go ahead and insert the indicator, the trend mode indicator, and you also have to enable it in your calculator by merely going to trend mode and setting it to true. Okay, and you want to make sure that you add a 0 to all the inputs where it says ticks, because we don't want a 2-tick entry, we want a 2-pip entry, which is 20 ticks. Okay, so you have to make a few changes in your calculator to accommodate that extra digit in the quotes. The other thing is, if you go all the way down to your key levels, key level adjustments, set it to true. I like these settings, okay? Because I'm not going to make key level adjustments. Well, I am going to make them, but I'm going to make them manually. I don't want the calculator to make them for me. So why do I set this to true? Well, what I do want to do is use the special extra digit rounding tool. And you want to set this to true. Okay, notice all the zeros in here. And of course the zone 7, just leave it at 7. But what that will do is it'll use the extra digit to push the entries a little further out. That demands extra price movement confirmation before getting triggered into a trade. It'll move the stops a little further away, which gives you a tiny bit more protection on the trade, but it also will pull the targets a little bit in closer to you, which makes the targets easier to achieve. Okay? That's how I use this particular configuration here. All right, and if you have any additional questions regarding this setup, please ask me in the trade room. That way I can open up the chart, open up the calculator, walk you through everything, and make sure you're good to go, and also everyone else has the benefit of your question. Okay, so that's the best way to use the trade room. Keep a notebook. Write your questions down as you think of them. Stay very organized with your questions, and then ask me in the trade room. If it's something that cannot wait, send me an email. Otherwise, the trade room is the best place to learn the strategy. Okay, so let's look at Friday's trade. So we're coming into our 8:30 start time. Actually, before I show you that, this is the resource I use to check news events, forexfactory.com. I set up the calendar. Okay, so we have some Canadian news here, but we don't have any US news, so I'm not really too concerned about this unless it's a Canadian pair. All right? Not really concerned about it with the Euro US. I do have to be aware of the 10 a.m. US consumer sentiment report. Okay? But the day before, if it was a Thursday, you would be concerned about the unemployment claims. Okay, you don't want to trade into that. You want to let that pass, let 5 or 10 minutes pass after the report comes out, and then look to take a trade. All right, so let's bear that in mind. All right, so here we are, and we can see that there is a setup at 8:20, and it triggers in. Now, that's too early for us, but we could get in sync with this trade. In other words, if you could still get to the entry, if the trade has not hit a money management level, or if the trade has not hit a stop, then you can take that trade at your start time when it hits the entry. So when this bar closes, it's now 8:30, I could take this trade. However, I'm going to want to make a little bit of an adjustment above this spike. Why? Because that spike had already tried to get long, and it might show us where near-term resistance might be in the market. Okay, so we want to, as long as we can make a tiny adjustment, a few pips at the most, we can adjust around that. And the high is at 13113. So I would adjust that up to 1312. And if it gets to 1312, let's just put this at 1312. Well, it is at 1312. Then I would take that trade. And the next bar misses by 0.2 of a pip. It gets to 13118. Okay, that's how I use the extra digit, by the way, a little bit of rounding there. Then it comes down, and look what happens. It fails to get above, and by making that adjustment, you avoid getting long here. And instead, the market goes short, you see? This is how you read price action, and this is why when I say counterpunch is more than just dots on the chart, you have to realize that price action tells us stuff, and we have to be able to read our charts properly. If this had happened right at 8:30 or whatever, we would have had to go long because we have nothing to work around, okay? But because it already triggered in and then we're trying to get in sync with it, we can make a tiny adjustment. 1 or 2 pips, sometimes 3, even 4 or 5 pips if it's a large enough trade. Okay, you just don't want to make too large of an adjustment. This was perfectly acceptable. All right, the other thing with this trade plan is that we're going to take off 25% at each target, and 25% is going to trail. So when you look at this long trade here, the minimum target profit you want to accept is 10. And you could see target 1 is 10. So if you got into this without adjusting, you would take 0.25% off at this target level. But once you make that adjustment, once you adjust from 09 up to 12, it's a 3 pip adjustment. All of a sudden, target 1 is no longer worth it anymore because you have to also consider spread. You're going to probably pay about 2 pips of spread, and that's only going to be a 5 pip profit to target 1. So in that case, you don't use target 1. You take off that 25% along with the next 25% at the next target, so long as it's more than 10 pips, okay? And then the third 25% would come off at target 3, and then the final would trail, okay? But this ends up staying flat. But by doing that, as soon as you hit a target and you're positive and profitable, that triggers your power of quitting trade. You move your stop to break even. At the end of that trade, no matter how it turns out, you're done for the session. Over time, you grow your account, and you use the power of compounding to expand your account, and that's expand your equity, and that's how you trade Forex successfully as a day trader. You don't want to overtrade. You have to be very careful to grab what the market wants to give you and not give your profits back to the market. So let's continue. The next trade comes at 5 after 9. Now this is Eastern Standard Time here. This is a perfectly acceptable trade. When this trade sets up, the bar closes down here. So you have to wait for it to pull back to hit your entry, and then you get short. So you get short at 13.01, okay? And that's going to push down. And look at target 1. Target 1 is only 7 pips, 70 ticks, 7 pips. So we're going to ignore target 1, and we're going to take that part of the trade off at target 2. And that means we're really only going to make 8 pips because you have to pay 2 pips of spread on the exit. But that's the minimum amount we will accept, okay? So you get 8 pips times 50% of your trade off at target 2. It's a small trade. It's okay. Take what the market wants to give you. This is dynamically adjusting to market conditions. Notice we're in the chop zone. Do I care about that? I don't, because the rules of the chop zone say we just don't take trades against the 50 EMA. We're below the 50 EMA, which is this mustard colored line. That means we can go short. Okay, we just can't trigger into a long trade when we're below the 50 EMA. All right, so don't get fooled by the chop indicator. We're not afraid of this. Then it comes down some more and it hits target 3, and you get your third 25% part of your trade comes off with a 14 pip profit minus 2 pips of spread. Okay, and then you trail down a little, but then it comes up, and that's all she wrote, and that's it. So avoid this trade because of some smart chart reading, little adjustment. Take the second trade. Power of quitting. You're done for the session. That's it. This is going to grow your account if you use this trade plan wisely. All right, you'll see a lot more examples, and a lot of trades are quite a bit larger too. But let's look back at what happened earlier during the European session, which starts at 2 a.m. Eastern Standard Time, or Eastern Daylight Time, New York time, current New York time, let's say. All right, so here we are. It's 1:30. There's a setup. It's at 2 a.m. We can go long here. Okay, it's a purple trade. Purple trades can be very profitable. Notice it's very choppy, but we're above the 50 EMA, so that means we can go long. The entry is above. Long trades are permitted. And finally, it triggers long. See, it took quite a few bars, but it stays valid, valid, valid. Triggers in. Check out our profit potential. 11 pips at target 1, perfectly acceptable. So let's go with it. Got a possible stop and reverse, but then this is all part of the trade developing. We don't do anything. We just stay with it. Can you add to your position here? You can, but you don't have to, and I would suggest that you don't, because it's just too complicated and there's no reason to do it, okay? No reason. Just let the power of quitting and the power of compounding work for you over time. You're going to be much happier. All right, so anyway, it hits target 1. The stop moves up, takes the risk off the trade, hits target 2. Got 25, your second 25% coming off there, right? For 15 pips, call it 13 pips after spread. Stop is moving up now, trailing the signal line, and the price just can't get any higher. That's all she wrote, but that's a nice trade. The rest of your position stops out with the trailer. And a one and done session again. So Friday was very good, the day after the CPT launch. Let's take a look at one more Forex pair, the pound US. All right, so everyone be careful of your Forex trading in general coming up with the Brexit referendum looming, okay? That's where Great Britain votes whether they're going to leave the EU or not, and that's going to have huge, huge consequences on Forex. You do not want to be trading in front of that. I would even go flat. Maybe you make a fortune, but maybe you lose a fortune, okay? You might think you have a small bet on, but if you can't get out of it, it could literally clean you out. So you want to be very careful not to be trading through that referendum. So mark your calendars, June 23rd, right? We're getting closer. A day or two before, I would consider being flat on everything, unless you're doing in and out day trades. All right, but June 23rd, watch out. All right, so going into our session, 8:30, and you could see this is in trend mode. There was a short trade here at 7:45, but that trade's over. There's a long trade. Notice it's in gray. We don't take that because the line is red. We can only go short, so it filters out a losing trade. Here's our trade. It's a purple short trade. It's at 850. Check your numbers. Look at that. You got 31 pips, 42 pips, 53 pips. Perfect. This is a great trade. We want it. And it pushes down, and you can see, notice I have an extra little dot here that's marking where the money management begins. Ask me about that in the trade room and I'll explain it to you, but there's a little trick that I do using 2 calculators. And that's beyond the scope of this video, but I'd be happy to explain it to you. Just ask me in the trade room, okay? So you can see it hit target 1, target 2, target 3, trailed down even further. An immensely profitable trade, one and done. Welcome to the day after. Let's take a look at the European session as well. Let me just go back to that. Remember, 2 a.m. Eastern, and here we are kind of getting closer. There's this trade here, but that's at 150, 155. At 2 a.m. it's way up here. So just by sticking to your start time, you avoid that trade, losing trade, right? Then you have this short trade, and it looks really great, except that you can't get it. Why? Because it opens down here, and it never comes up to touch the entry. Now, we use a technique called the chase entry. You could even set it in your calculator, which would chase this entry down. Once it opens below it, it'll push the entry down 2 pips. In case it comes up close, it'll let you take the trade. So if you just look at it, the entry was at 51. It got up as high as 47. It would not have gotten up to 49 anyway. Okay, but you could set that to 2 pips in the calculator and you would see the entry. I'll just show you really quick how you can do that. This is optional, but you go chase ticks right here, set it to 2, right? 20 ticks, 2 pips, put in a 20. And now you'll notice, well, the reason why it didn't chase it is because when the bar closed, the line was blue. So the calculator's smart enough to know, hey, it's wiggling in here, but it's based on the close of this green bar, and the blue line was long, so you can't go short. Okay, otherwise you would have seen an entry 2 pips below, and then it didn't chase it again because by the time this bar closed, it had already hit targets. But that's how you can set your chaser, and you can play with that. Okay, it's a good way to learn. Again, set up a dummy chart and practice it. So we're still looking for a first trade. Look at that, avoiding a long trade because the line is red, and instead we get the purple trade. A lot of purple trades on Friday, so we have to take that. That's the first trade of the day, and it's at 4:25. You had to wait 2.25 hours. Welcome to the world of Forex trading. But the European session goes from 2 to 5 a.m., so that trade is perfectly acceptable. And when it finally triggers in, well, unfortunately, it's going to stop and reverse right here for a small loss. Okay, so what you do want to stop and reverse, take the entry and adjust it a couple pips higher to 49. You might even want to adjust it around the 50 to 51. Okay, and it gets as high as 51. So that trade's going to lose about 2/3, and the European session was actually a losing session. Okay, can you go long here? No, because you're already finished with the European session. Look at the time. So you just take your entry in the opposite direction. You move your stop down from here to here, but then just make your 2 pip adjustment. You're probably getting out right around there, working around that 50 key level. Okay, so that's a losing trade. It happens. So there's a good walkthrough on a couple Forex trades. I was going to go through some futures trades as well, but I'm going to do that on another video. I wanted to be real thorough on this one. So if you're interested in what happened on the day after with some of our favorite futures charts, come back and find the next video that I will record and produce shortly. Hope you enjoyed this, and hope to see you all in the trade room. This is TJ with the Counterpunch Trader. See you next time.